Good afternoon, traders. My name is Tomasz Juszczewski, and this is Daily Analytical Report with Alpari. So, on the markets, we're having a full risk off mode, so traders are escaping to safe haven assets. Stocks are going down, but obviously we do have a bubble, so most probably we'll end this day with an upswing, as we always do, but at least for now we're having declines on stocks. Sixth consecutive day of rises on precious metals. American dollar is erasing all the gains that we got after Trump was being elected as a president. So it's happening. Today I heard somewhere in the news that in the United States journalists should stay at work all the time because there's so much going on there. That there's no reason for them to come back home because by doing that they are missing a lot of action. So 2 days ago we had revelations from Washington Post. Now we do have, I guess, from the New York Times about from fired FBI director, Mr. Comey. Apparently he's telling that Donald Trump was pushing him to end the investigation on Mr. Flynn. Obviously, Trump is denying that, Republicans are denying that, but it influences the markets. And the latest development is about this story from Washington Post that Donald Trump revealed some top secret news to Sergei Lavrov. Vladimir Putin said that he can give transcripts of talks with Mr. Lavrov to show the Congress that Trump didn't reveal anything, and that American press, American journalists are a bit, he didn't say crazy, but at the end of the day I think that's what he thinks. So it's kind of funny what's going on right now in the White House and in all that surroundings around Donald Trump. Obviously, it's affecting the markets. We are having, as I said, a risk-off mode, and in a typical risk-off mode, what we are seeing is higher prices of gold, silver. We are seeing decline in price of shares, and a decline in American dollar to Japanese yen. So let me show you the calendar and we'll go to the technical analysis of the most interesting instruments. On our live trading account we do have 2 positions. They are doing very good. I will tell you later what are those positions, but if you follow us on Twitter, you should more or less know. Obviously, we cannot tell you that we are opening a position there on Twitter because we are not giving any recommendations whatsoever. But by following our Twitter, you can see more or less what are our views on the market, and you can use it in your favor. We'll start with euro dollar. As you can see, this is this candlestick from elections, and we're having another higher high and higher low, so we are having yearly highs on euro dollar. The sentiment is positive. Obviously, with every candlestick up, the chances for a correction are higher, but still the sentiment is very positive, and we should go higher and higher and higher. Euro to Australian dollar. Yes, we do have a position here on this instrument. As you can see, another hour and another higher high and higher low. This position is already protected on the break-even, on stop profit point, I guess. We opened that somewhere here. Our stop loss order is somewhere here, so we are already protecting a nice profit on this trade. Quick reminder for you what's going on with this trade, why this trade, not another. We're having an uptrend in the midterm. In the long term, we broke down trend line here, so it also triggers a buy signal. upswing, correction, upswing, correction. The correction was shaped like a wedge, those blue lines. In addition to that, wedge ended with an inverse head and shoulder formation, which gave extra points for the bullish scenario. Finally, the price broke the upper line of the wedge and the neckline. We tested that as a closest support as well. It was a resistance. We tested that as a closest support, so everything went fine. And after that, we got an upswing. Upswing broke important horizontal resistance. Here, this candle created also from the movements after Trump was being elected as a president. And as you can see, we use this resistance as a support, and we are heading higher and making new higher high just while I'm speaking right now. British pound to Canadian dollar. We tweeted about that today because the price declined nicely yesterday. They tried to test that levels today as well, and what we are having here, maybe to be more accurate like that, what we are having here is a flag formation. Flag formation in an uptrend, correction, uptrend, wedge, uptrend, flag. Those rectangles are showing us a correction equality pattern, but that correction that we're having right now was a bit smaller because this one was 360 pips and this one was 330 pips, so it was a bit smaller. But as you can see, we're gonna test the upper line of the flag, and in case of a breakout, let me just remove those corrections equality patterns because, well, less than 10% difference, so it's not much. We can still consider this as a trend, as a correction equality pattern. But we're about to test the upper line, and in case of a breakout, in case that candlestick will close above this line, we should see a buy signal here and the price aiming higher and higher and higher. So on British pound to Canadian dollar, we do have an optimistic signal. Before going further, let me show you the calendar, right? We didn't check the calendar from the very beginning. We can see an upswing on British pound, but as you can see, we got the data from Great Britain, and it wasn't so good. Actually, we got a bigger number in climate count change. Average earnings, excluding bonuses, also went worse than expected. And despite that, British pound is heading higher. As on every Wednesday, we do have EIA crude oil stocks change data. We are expecting a decline of 2.3 million barrels. And apart from that, not much is going to happen. But remember, tomorrow on Thursday, we'll have important data from Australia, from the job market from Australia, ECB monetary policy meeting as well. A speech from Mario Draghi, as well pack of data from Great Britain retail sales, which is usually very important and very anticipating. And we are anticipating those. Right, so that would be it from the fundamental point of view. And next one, American dollar to Polish zloty. So the correction equality pattern is off the table. We saw an initial reaction here, but that was it. So let me remove those. Let me remove also this horizontal resistance because it will take time to get there, so we don't need it now. And we are now touching the lower line of the flag. We broke important horizontal support here. Where is the next one? Let's say the next one is somewhere here, so we still have some space to that. Sentiment is definitely negative on this instrument. This is American dollar to Polish zloty. New Zealand to, well, here, I would like to tell you one thing, because we are talking about risk off mode. During a full risk off mode, we do have escape from emerging markets currencies, like for example Polish zloty. But here we can see that Polish zloty is gaining strength. So the difference is that we do have a risk off mode, but in addition to that we have an escape from the American dollar, right? So that's a combination of risk off mode and abandoning American dollar. So that is why, for example, emerging markets currencies are gaining against American dollar are gaining strength, which is not happening very often, because most what happens is during risk off mode is emerging markets currencies losing strength. But this time it's different, because traders, investors are escaping from American dollar as well. New Zealand dollar to American dollar here. And that's not the best situation in the world. I would say we closed this gap and we're ready for a downswing actually. Here we're below important resistances, but it does not look good from the technical point of view. Euro to Japanese yen is having a very technical trading upswing, breakout of horizontal resistance, then they tested that as a support, then an upswing again. Looks good. A bit closer look in the short-term situation, and you can see that we bounced nicely off this first horizontal support here on 124.5. That's the closest support in the short term right now. Euro to New Zealand dollar is after breaking the downtrend line and creating well, first they created inverse head and shoulder formation, then they broke the downtrend line, then a neckline. Is having an upswing, and they broke first horizontal resistance, this yellow, and they are breaking the second horizontal resistance, this, well, not breaking, they're gonna test it. We'll see how it will go, but it's potentially a good place for a bounce, for take profit action. So watch out for that. If you're long here and you're just entered now, I wouldn't do that. I would not enter this position, this trade right now with a buy order, because, well, it's not according to my system, right? I prefer using corrections than a breakout, and for me the price is simply too high right now to enter with long position. Next instrument will be New Zealand dollar to Swiss franc, where we do have a beautiful pullback after this false breakout, obviously supported by the fundamentals, but still, after some time, nobody will remember about fundamentals, but everybody will see a technical sign here. So a false breakout above the upper line of the flag and above the horizontal resistance, and now the price is aiming much lower. So from the technical point of view, it looks very promising for sellers, obviously. American dollar to Canadian dollar. Here we also tweeted about that because it looked decent. Unfortunately, here escape from American dollar does not help here. What was the situation, right? We broke horizontal resistance here, those two tops, 50% FIBO, we went significantly higher, and finally the time for a correction came. The correction came, the price bounced off 50% Fibonacci with a double bottom formation, and it looks kind of optimistic for buyers, even despite the fact that globally American dollar is losing ground. Here the situation does not look bad from the technical point of view. It would look much better if the price came above the green resistance here, But still, as long as we stay above 50% FIBO, that's a good situation. And actually, this trade has a low risk comparing to potential profit, because if you would enter here, stop loss somewhere here, but potential profit is 2-3 times higher, bigger than the potential loss in my. Okay, we can go further. American dollar to Japanese yen, you can see a typical movement for risk off mode. We had a flag, we had a nice flag, but instead of breaking the upper line of the flag, which is always more expected in an uptrend, right? Because flag is a trend continuation pattern, so what do you expect is a breakout of the upper line of the flag. Instead of that, the price broke the lower line of the flag and is heading to the closest horizontal support here. So actually this flag can be a false pattern. I would say that the gravity here will be very strong, and actually we will test this horizontal support soon, and this dynamic support created by a bigger flag in a long term, as you can see here. So this creates a chance for at least 35 pips or 70 pips downswing, right? So I guess it can be a nice opportunity for short-term traders. Watch out for the bullish reversal here, though, because last candle, as you can see, is a hammer. Obviously, this H4 candle also can result with a hammer. So far, it does not look like it's gonna reverse, but every hammer in their lifetime looked like that at some point, right? So that can result in a hammer as well. American dollar to Swiss franc. Yes, that was a nice trade from our side, because we entered with long position here and we closed that long position here. Very good trade, because then the price reversed sharply. So there is no buy signal here whatsoever. This orange area can be considered as a false breakout. And this is a typical reaction after false breakout, so negative. We broke horizontal, so we broke the upper line of the flag, horizontal support here, short-term dynamic support here, and we are still heading lower to the long-term, very, very long-term support, because it was first created in May 2015. So that can be a trigger for a reversal, but for that we have to be patient, and we need to have a wait and see approach. Right, Australian dollar to American dollar, usually very correlated with gold and silver. What we are having here is 1, 2, 3, 4, 5 bullish days in a row. Now we're going a bit lower, despite the fact that gold is going higher and silver is going higher as well. Here, from the technical point of view, I don't have anything interesting for you, so I don't think that we will bother about this instrument any longer. And let me switch to gold, which is just crashing through the 38.2 Fibonacci level. They were having a bit of hesitation here, as you can see on this candle. Shooting star, but now they are heading higher. So what's the situation here on gold? One of my favorite instruments. 1, 2, 3, 4, 5. 5 bullish days in a row. We are having even more on silver, but I will talk about silver. And from those 5 days, it looks like today is one of the best, from bottom till the maximum so far. What happened is we broke midterm downtrend line here. First horizontal resistance here on $1,235 per ounce. second horizontal resistance on $1,241 per ounce, and we stopped for some time under 38.2 Fibonacci level, but as you can see we crashed that, probably some stop loss activation as well, and now the price of gold is heading higher, but it's still too early to say about any potential buy signals, at least in the midterm and in the long term, because in the short term there is a buy signal. But in the midterm and in the long term, and for that, what do we need is a breakout of this black line, which is a long-term uptrend line here, which started in December 2016. As long as we stay below this line, the sentiment is negative, but there is no sell signal. Sell signal will be created once the price will create a reversal, a bearish reversal pattern here. I would say that the most probable scenario is, well, for now, is the price testing this resistance. And that's the most probable scenario for me. What will happen after that? It depends from the reaction of the price on this in this area. In case of a breakout, we will have a buy signal back on the market. In case of a bounce, we'll have a sell signal. How is silver doing? 1, 2, 3, 4, 5, 6. 6 bullish days in a row. And on silver, what we did is we managed to come back above the long-term uptrend line, which started in 2015, at the end of 2015. So this basically what it is a false breakout. And then we are attacking horizontal resistance here, and it looks like this resistance will be broken. So also maybe there is no buy signal yet, but there is we do have a positive surrounding. We may call it a small optimism, a small short-term optimism, but in my opinion it's a bit too early now to go with a long position, even despite the fact that in the long term I'm very bullish on gold. So at the same time I have to be bullish on silver, right, if those instruments are correlated. British pound to Canadian to American dollar, popular cable. We're having a bounce. Well, we're having an uptrend. We had a wedge, breakout of the wedge, upswing, small correction here for 140 pips, breakout, correction 135 pips, upswing, correction, and a correction for 140 pips. We also bounced off this horizontal support here. I thought that this correction could be a bit deeper, that they will try to test the uptrend line, but they used the first horizontal support here for a bounce. Price is heading higher even despite the fact that we got slightly worse data from Great Britain, but obviously it's a huge influence of American dollar, which is getting destroyed right now on the various markets. So even with the slightly worse data from UK, we still do have an upswing, and most probably will make new midterm highs. To new midterm highs, we just need 23 pips, which is not much. Canadian dollar to Swiss franc. You know that yesterday I put that line here to indicate an opportunity for a nice sell stop order. Although I'm not the biggest fan of pending orders, but why it looks alright? Because we do have a long-term downtrend. This looks like a false breakout above the trend line. We do have a symmetric triangle formation. We bounced off the lower line of the symmetric triangle formation, but it looks like it's gonna be broken. And in case of a breakout, we should see a strong downswing, 300 pips downswing, at least according to the technical analysis. So it would be nice to be here with this. Obviously, it's not a recommendation because I'm not placing a position here. I'm just telling you. I'm just telling you how it looks like from the technical point of view. Very similar situation on Australian dollar to Swiss franc. Here we also aiming for horizontal support. I don't like this kind of breakouts, and that's why I'm not using pending orders much. Everything that I trade is manual trading. So I would be skeptical, but according to the book, let's say, the theory of breakouts, that is a good setup for a breakout. But here those long tails show you why I'm not the biggest fan of breakouts, because there are many false breakouts. So the price can get here, trigger your sell stop order, and can be a pullback hammer candlestick with a long tail, and you may be left with a short position open, and the price can go higher. Okay, now oil and indexes. As you can see, oil is stuck, so we won't have any interesting news from the oil market most probably in the next few days. At least from the technical point of view, we are above important horizontal support, below important horizontal resistance. From the latest downswing, we retraced around 50%, so we are exactly in the middle of the recent downswing, which makes it not very attractive. S&P 500, as you can see, we are heading lower. We made new monthly lows with this candle. We are very close to all-time highs, but we went to almost to monthly lows. Now we are still above the horizontal support here. As long as we stay above, the sentiment is positive. Another strong support is this red line here. We all know that stocks are crazy, so I don't even want to try to explain the situation here, which looks like when there is a bad info, there is a small correction, but those lower levels are instantly used by investors to buy more with better prices. So I wouldn't be surprised if that would resulted in an upswing as well and new highs. It does not look like that, but it can happen. And DAX also is having a bad day. Maybe not the worst day in his life, but still kind of bad. Short-term, mid-term uptrend line is broken. But it's nothing major. It's nothing major. I would say it's business as usual. Well, even if you will say that in one day S&P 500 erased all the upswing in this month, but still we have to remember that those upswings were very small, and we were having a sideways trend for the most of the time in this month, in May. So it's not a biggie if they would decrease a lot, and we would have a strong upswing before that, and they would erase all of that. That would be significant, but we had mostly a sideways trend, so it's not a big deal that we touched monthly lows, right? It is still fine, especially that we are above this horizontal support here. Okay, my friends, thanks very much for a daily analytical report with you today. Remember that trading and investment in financial markets involves an element of risk, and if there are any traders from Nigeria, hopefully see you on this Saturday, or maybe next Saturday if you're from Lagos. We are coming to Nigeria to give seminars. I would be very pleased. I am very pleased to do that. So see you there. If you're not gonna be there, but you still want to receive some trading ideas from us. Follow us on our Twitter account and our website alpari.news. Thanks very much and goodbye.